Hello, welcome to Accounting 2010 Chapter 2 videos. In the first video, I will be discussing the accounting cycle. So I may disappoint or excite you depending on your take on this issue. In Chapter 1, we actually gave you the end of the story when I showed you how the financial statements were prepared. The order of preparation, which was it? What was it? One was the income statement, two, the statement of shareholders' equity, or in this course, one half of the statement of shareholders' equity, which is the statement of retained earnings, and the third financial statement that we're going to focus on in this class, the balance sheet. We gave you the end of the story before we told you the beginning. That's what Chapter 2 is going to do. We're going to take you back to the beginning and we're going to start the accounting cycle. So as I told you in the Chapter 1 lectures, accounting is the language of business. And in that language of business, we have a beginning, a middle, and an end in each period, and we call that the accounting cycle. In Chapter 2, we are going to be talking about the first four steps in the accounting cycle. And here is the whole story of the accounting cycle. When we are looking at telling the language of business, one, we're collecting and analyzing data from transactions and events that happen in our business. Those events which are relevant and useful and need to be shared with the users of our financial statements, those external users. We're going to take that data that we analyze and we're going to record it in a general journal. This is like a Dear Diary. Here's what's going on in my business. Then we're going to take all those Dear Diary stories and we're going to put them in what we call the general ledger. The general ledger summarizes those day-to-day events into the individual accounts so we know what are the balances in each account. We always want to know what the balance in our cash account is, right? We want to make sure we have enough money in there, but we want to also know what is the value of all of the accounts. How much money do we owe in accounts payable? How much supplies do we have? We want to know all that information. And at the end of the period, when we've told the Dear Diary story, we've summarized those stories into the general ledger accounts, we want to prepare an unadjusted trial balance. We want to try it out. Is our left equaling our right? And then we'll go on in Chapter 3 and look at adjusting entries. We'll talk about that then and prepare an adjusted trial balance. Are we still in balance after making some adjustments? Then we're going to go ahead and prepare those financial statements. The IS/SHE/BS, the income statement, shareholders' equity, and the balance sheet. And then we're going to go ahead and close out our books for that period because some of the accounts are only for this period. Some of them are going to go on, that going concern, we're going to take it from period to period, but some are only for this period. And then we're going to do one more trial balance to see, are we still in balance? The left equal the right so we can all sleep at night. So step 1. If any of you have been in a managerial role or you are even an employee, you know that day to day there are receipts and invoices and payroll documents, all kinds of things going on in our business. And somebody's getting those things set on their desk, whether you're the manager or the accountant, the bookkeeper. If you own your own business, you're going to be generating a lot of source documents. We call those source documents. And you've got to figure out, well, what the heck do I do with them? I've got to analyze them. Where did I get all this stuff that's sitting on my desk? And when you do that, if you're in that role and you're not really sure what's going on with those source documents, you may need to go ask the person who put them there, or you may have to call your vendor, or you may have to call up your payroll person. And you need to figure out, well, what is with these documents if it's not self-explanatory. Another resource you can do is look in your records and see, well, is there something similar to this? And how was that document handled in the past? Then the next question you have to ask yourself, well, where do I record this information? Is it relevant to what's going on in my business? Should I be putting in my books? Is it useful to making decisions? So you need to really sit down and think about it, even in your homework problems. Is this something I need to record? And if so, how do I record it? And most importantly, what accounts were affected? So after we've reviewed the transactions, we're going to journalize them. We're going to put them in that Dear Diary. Here's what I did. It's a short story, and we call that the general journal. And this is where those debits and credits come in, the left equaling the right. So I do like to call it the Dear Diary of Accounting, your general journal. And this is where we are going to be summarizing all those analyzed transactions that have taken place. So let's just take a look at this general journal. And so in the general journal, we're going to record the date. In this case, now you know my birthday, 1/12/1961. Um, in this case, we could take a look at the accounting ease. I call it accounting ease. It's like its own language. And I've got it down in accounting, but what this story says is I've got cash recorded on the debit side, and we exchanged it for common stock. We gave somebody equity in our company. If the equity in our company goes up, where does it go? It goes up on the credit side. So this little story says, Dear Diary, Dear General Journal, on 1/12/1961, we got some cash, it went up, and we gave some stock, our equity went up. All of that story is told with this journal entry. We can go on and say on the very same day, we bought some land. Land is what type of an account? Do we like to have land? Yes, it's an asset. If an asset goes up, it's on the debit side. What did we give up? Well, we gave up some cash. Our cash went down. What type of an account is an cash? An asset. So sometimes we can exchange one asset for another. Cash went down. We recorded on the credit side. Is everything in balance at this point? What is our total? Let's take a look. We've got 10,000 cash, 10,000 in common stock, 5,000 in land. Cash went down. Do debits equal credits? 10 plus 5 is 15,000. 10 plus 5 is 15,000. Yes, they are in balance. Debits are still equaling credits. The left is equaling the right. Every transaction has a minimum of one debit and one credit. Every single transaction. Put a down payment on the car. We have a $7,000 loan on the car. Nonetheless, the left is still equaling the right. The 10 is still equal. So overarching, we need to make sure that everything stays in balance. So let's go ahead and take a quick explanation of this and how it would flow through. In an English story, I would say I got $10,000 cash and I gave $10,000 of common stock. Now we're always doing it from the perspective of the company. I got $10,000 cash and I gave $10,000 of common stock in exchange for my friend wanting part ownership in my company. So in the accounting story, if I were to translate it, the accounting story would say debit cash $10,000. I got it. My cash balance went up. I gave $10,000. Equity invested in my company went up. I credit it. Debit cash, credit common stock. Notice I've got the debit word to the left, the credit word to the right, so that I can determine by just looking at the placement that I've got a debit and a credit. If they're all lined up, even though they're debits and credits, you can't tell by that placement of the words. So English story, got $10,000 cash, gave 10,000. Placement of the words, placement of the numbers tells the story in accounting that I just said in English. But one of the problems is, and this is the general journal, is at looking at this, we really can't tell how much money is in each account, especially after we've done about 20 or 30 or 50 of these. So we have to go ahead and create those T accounts. We're going to post to T accounts in order to summarize what's in each account. So at the end of the month, we can have a summary in each account. So in this case, we have the asset cash, the equity common stock. They're on the left and the right hand side of the equal signs. We post, we take the $10,000 in the journal and we post it into the ledger on the left hand side, the debit side, and we can see that we've got $10,000. We move it over, we post the equity on the credit side, and we can see $10,000. So we've not only got the complete story, we've got the summarized story of each account. So again, every transaction needs at least one debit and one credit, and we cannot sleep if the left does not equal the right. And then we have to look, did the value of the assets increase? Yes, but so did equity because people contributed money to be an owner, both sides increased. Let's do another quick story. English story. I got land, and I paid $5,000 cash for that land. So I got land, but I had to give $5,000. Accounting story, left-hand side, asset, got land, debit increased. What did I give? Gave cash. My cash decreased. So what? What just happened? Where were we at? We're in assets in both cases. We're in that asset side, the left-hand side. What? Yes, one side of the equal sign can have both a debit and a credit. The land, we had a debit under land, a credit under cash, but the bottom line is we're still going to have an equal amount of debits and credits. What do I mean? Land has got $5,000 in it. We had $10,000 cash to begin with. We gave $5,000. Now we have $5,000. The plus minus normal balance, $5,000. The left is equaling the right. So again, did the value of our assets increase? Well, overall, no. We still have $10,000 worth of assets, just like we did here, but we took some of that asset cash, used it to buy land, plus minus equals normal balance $5,000. We still have $10,000 remaining in cash and land, and we have $10,000 in common stock. So the overarching umbrella, the left is equaling the right. The debits and credits are still equaling. Everything is working out. We can sleep at night. We are going to be doing this several times over and over in class. We're going to have a packet and work through it. And now we're going to move on to video 2, the first steps in the accounting cycle.